Well, finally, we have some good news from the Bank of Canada. They announced this morning that the overnight lending rate would drop by 25 basis points from 5% to 4.75%. So, what does this mean for people who invest in real estate, are buying real estate? What does this mean for the real estate market? This is what everybody wants to know. This is what everyone keeps reaching out to me and asking. Rates are down. What does this mean? If rates are lowered further, what does this mean? In all honesty, I don't have a crystal ball, but what I can tell you is that I've been doing this for a very long time, and what I'm seeing in the real estate market has always been a direct reflection of fundamentals, supply and demand fundamentals. So let's look at the real estate market like this. I look at it as we have a wildfire. That's a supply and demand fundamental imbalance. So the real estate market has been incredibly hot for a very long time. So what does the government do to get that fire under control? Well, they'll put in government policy through taxes, through increasing interest rates. And all that does is throw water on a fire, and it gets it to slow down, go in a different direction, and eventually that fire picks back up through rates coming back down. So that's what I think we're going to see. Now, what does it mean for prices? I wish we could measure a thing called FOMO, because I think it's the leading indicator of when real estate prices start going up. And when I mean up, not your 1%, 2% annual growth, or a quarter of a point month over month growth. I'm talking about double-digit annual growth, and it's difficult to measure. So what is FOMO? It's fear of missing out. And what we typically see is people are more confident. We see consumer confidence and optimism come back into the market, and that's typically through when prices start to increase. So a lot of people will wait to buy, wait to invest until prices are actually coming up, because they're more confident that it's going in the right direction. I think that's a little too late if you're an investor. Not too late, but ideally you're buying at the bottom. So I think there's a short window of tremendous opportunity right now where prices are going to go up. I don't know when it is, but it's going to be when the FOMO meter kicks in and people are confident that real estate prices are going up, and then more people will come off the sidelines, more people off the sidelines. Toronto is in an interesting market right now because we've seen a huge amount of deliveries, completions in the downtown core over a very short period of time. So what do I mean by that? The entertainment district on its own saw roughly 4,000 new condos come to market over just a 4-month period. Something like that is usually, that kind of inventory is usually over a 2 or 3 or even a 4-year period historically. So a lot of that inventory has slowly been getting worked through by getting rented or getting sold. But what's going to happen now is interest rates have come down. It's going to be more appealing to the entry-level buyer that is typically a condo buyer, and we're going to see more of that demand come off the sidelines. I think it'll take several months to work through that inventory, and then once that inventory has gotten lower, you're going to start to see a lot more stronger price appreciation, and then that FOMO meter is going to pick up, and I think prices are going to really take off. So, this is all very good for real estate owners and people getting into the market. Your rates are going to come down if you're a variable rate mortgage. If you're getting into the market, your ability to qualify is going to be a little bit easier. And this looks like it's a start of an interest rate cycle where rates are going to start coming down. So to all of you real estate investors, hang in there. I've said it before. I'm feeling the pain through higher rates and a tougher market, but all this is doing is creating a lot more opportunity for investors, for people, homeowners to make money in real estate over a long period of time. This is Ryan Coyle, Connect.ca. Hope to talk to everyone soon.